at 9:30 a.m. My name is Daniela DRIPS. I will be quickly covering yesterday's closing data, main indexes, and the key companies. Please follow us online.
Good morning. This is DRIPS Media, Lid from New York. DRIPS Media, the revolutionary digital service that transforms the way you stay informed. With DRIPS Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, DRIPS News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with DRIPS News.
All three major indices reversed course from the previous day's gains and ended the day in negative territory. The Dow Jones Industrial Average fell, closing at 38,763.5, marking a 0.6% decrease. The S&P 500 also followed a similar trajectory, dropping 0.8% to finish the day at 5,199.5. The tech-heavy NASDAQ experienced the most significant decline, falling by 1.1% to close at 16,195.8. We'll delve deeper into these market movements with our panel of experts after the break. We'll discuss the potential factors contributing to this downturn, including rising interest rates, inflation concerns, and geopolitical tensions. Stay tuned to hear their insights on what this could mean for your portfolio and the overall market outlook. Welcome back to the show. Let's take a closer look at how some of the tech giants fared yesterday. Apple saw its stock price close at $209.80, a 1.3% increase, effectively reversing 2 consecutive days of losses. Google also ended the day on a positive note, with its shares closing at $158.90, a 0.4% gain, snapping a 4-day losing streak. However, it wasn't all green in the tech sector. Microsoft stock bucked the trend, closing at $398.40, a slight dip of 0.3%, ending a one-day streak of gains. These mixed results from major tech companies highlight the current market volatility and uncertainty. Investors are weighing a multitude of factors, including the broader economic outlook, interest rate trends, and the performance of other sectors. We'll be discussing these factors and more with our expert panel, so stay tuned. Amazon ended yesterday's trading session at $175.20, reflecting a 2.1% decline. This downturn marks the 5th consecutive day of losses for the e-commerce giant, resulting in a 7.8% decrease in its stock value over this period. Since the beginning of the month, Amazon's shares have taken a hit, showing a decline of 7.8%. However, despite these recent setbacks, Amazon's stock is still up by 14.6% since the start of the year. Now, let's shift our focus to Tesla. The electric vehicle manufacturer experienced a 1.5% drop in its share price, closing at $285.40. This decline marks the 3rd consecutive day of losses for Tesla, contributing to a 6.1% decrease in its stock value over the past 5 days. Looking at the bigger picture, Tesla's stock has experienced a 6.1% decrease since the beginning of the month, but it still boasts a 45.5% increase since the start of the year. Shifting gears to other tech giants, Amazon stock saw a 0.5% increase, closing at $162.80. This marks the second consecutive day of gains for the e-commerce giant. Meanwhile, Meta Platforms, the parent company of Facebook, experienced a 1.1% decline, closing at $488.90, effectively reversing the previous day's gains. NVIDIA, a leading chipmaker, also faced headwinds, with its stock price dropping by 5.1% to close at $98.90. This decline halts the previous day's upward momentum for the company. These varied performances among tech companies underscore the ongoing market volatility and the challenges investors face in navigating the current landscape. Factors such as interest rate hikes, inflation concerns, and global economic uncertainty continue to weigh on investor sentiment. We'll be back after the break to discuss these factors and more with our panel of experts. Let's delve a bit deeper into Meta Platforms. The parent company of Facebook saw its stock price close at $488.90, a 1.1% decrease, effectively reversing the previous day's gains. Despite this recent dip, Meta Platforms has seen a 3% increase in its stock value since the beginning of the month and a considerable 38% surge since the start of the year. Over the last 10 days, Meta has experienced gains on 5 of them. Now, turning our attention to the financial sector, we saw a mixed bag of results yesterday. Bank of America posted a 1.0% gain, closing at $37.30, marking 2 consecutive days of gains. JP Morgan also ended the day in positive territory, albeit with a marginal 0.03% increase, closing at $200.40. This marks the second consecutive day of gains for JP Morgan as well. However, not all financial institutions enjoyed the same upward momentum. Morgan Stanley saw its stock price decline by 0.9%, closing at $92.10, effectively reversing the previous day's gains. Similarly, Visa experienced a 0.7% dip, closing at $256.50, also reversing the previous day's gains. MasterCard rounded out the financial sector performance with a 0.3% increase, closing at $449.80. This marks the second consecutive day of gains for the payment processing giant. These varied performances within the financial sector highlight the complexities of the current market environment, where investors are carefully assessing a range of factors, including interest rate expectations, inflation data, and overall economic growth prospects. Goldman Sachs, another major player in the financial sector, saw its stock price close at $350.50, reflecting a 1.8% decline. This downturn marks the third consecutive day of losses for Goldman Sachs, contributing to a 4.7% decrease in its stock value over the past 5 days. Since the beginning of the month, Goldman Sachs's shares have taken a hit, showing a decline of 4.7%. However, despite these recent setbacks, Goldman Sachs's stock is still up by 10.5% since the start of the year. Over the last 10 days, Goldman Sachs has experienced gains on 4 of them. Turning our attention to the energy sector, ExxonMobil experienced a marginal decline of 0.2%, with its stock price closing at $105.70. This slight dip follows 2 consecutive days of gains for the oil and gas giant. Chevron, another major player in the energy sector, saw its stock price close at $165.20, a 0.7% increase. This positive performance marks the second consecutive day of gains for Chevron. Now let's take a look at the cryptocurrency market, which saw a surge in prices yesterday. Bitcoin, the world's largest cryptocurrency by market capitalization, closed at $57,409, marking a 4.3% increase. This positive performance reversed one day of losses for the digital asset. Ethereum, the second largest cryptocurrency, also experienced a significant upswing, closing at $2,438.30, a 4.4% gain. This upward movement also reversed one day of losses for Ethereum. Dogecoin, a popular meme-based cryptocurrency, wasn't left behind in the rally. It closed at 10 cents, reflecting a 4.5% increase, also reversing one day of losses. These gains in the cryptocurrency market suggest renewed investor interest in digital assets, potentially driven by factors such as increased institutional adoption and growing mainstream acceptance. However, it's important to note that the cryptocurrency market is known for its volatility, and investors should proceed with caution. The broader cryptocurrency market echoed this positive sentiment. Ethereum, the second largest cryptocurrency, ended the day at $2,438.30, a notable 4.4% increase. This upswing reversed one day of losses for Ethereum, shifting our focus to Dogecoin, the popular meme-based cryptocurrency. It closed at 10 cents, marking a 4.5% surge. Similar to Bitcoin and Ethereum, Dogecoin also reversed one day of losses. These gains across the cryptocurrency market suggest a resurgence of investor confidence in digital assets. Factors such as growing institutional adoption and increasing mainstream acceptance could be contributing to this renewed interest. However, it's crucial to remember that the cryptocurrency market is inherently volatile, and investors should exercise caution.